Now I'm going to bring on our next speaker, and that would be Bill Costarides. Bill is a night scalper founder and has been trading the S&P futures since it opened in 1997. He recognized that changes were coming in the way that people entered and exited the market. After years of placing orders over the phone to the night desk at his broker, he was actually one of the pioneers to test some of the original electronic trading platforms. He has spent countless hours over the past 2 decades studying, trading, and testing. And just 1 second, Bill, I'm going to go ahead and promote you as well. And staying in the lab until he got it right, which is what a real trader does to perfect his craft. His Greek heritage earned him the name Bill the Greek, and the rest is trading history. In 2010, he brought his strategy to traders across the globe, sharing his knowledge, his strategy, and his money management skills that have made him a world-recognized expert on trading the Globex, located at the Chicago Mercantile in Chicago, Illinois. The Globex is essentially the fastest and most reliable electronic trading system for futures and options. Bill continues to study and prepare for what the market will bring, and he shares that information and experience every night in his online trading room with his students. He calls real trades in a live market with his own money and helps listeners navigate from entry to target while maintaining the money all along the way. So, Bill, are you here with us?
I am. Good morning, and thank you. And make sure that Woody has access as well.
Yes, sir. I'm promoting him right now as well, so he'll be able to see the questions. If you would like, I'm going to send you over and make sure you are the presenter. So you are the presenter, and your screen is showing. And I just have to say, Bill, I share in your Greek heritage.
You do?
Yes, sir. My Yaya, well, I guess you know what that is.
There you go.
She's from Greece.
All right. Well, what was her last name?
I do not know her maiden name. It's Howie now.
Okay. Well, we thank you. I'm not seeing the slides on my screen yet.
I can see your desktop right now. It's a picture of, looks like a lighthouse.
A lighthouse.
Yes, sir.
Right.
Yeah, I need to be the presenter.
Oh, okay.
That's
okay.
Woody.
Sorry about that. Woody, I'll make you the presenter right now. Okay, Woody, you should have it. And I see some charts now.
I need to see what you guys are seeing so that I can know you're seeing the right thing. How do I do that?
If you look at the very top where it says above screen
Audience
sharing.
view, yeah.
Yep, there you go.
Yeah, that's not the right screen. So how do I change that monitor?
If you go, do you see the play button where it says show my and screen with a down arrow?
Yeah, there we go. Okay.
There you go.
Let me see. We want monitor 1, I think. No, we want. Hang on. We want monitor 8.
Perfect. I see Night Scalper, A Better Way to Trade,
Yeah,
April 26, 2014. Perfect. Well, Bill and Woody, I'm going to let you guys take it away. I'm going to go ahead and mute myself. And if you need anything, just let me know. I'll be listening.
And you guys are making the recording?
Yes, sir.
Okay, great.
Thank you, James.
Thank you, Bill.
Okay, good morning, everyone. If I could get a mic check real quick, be sure we have pretty good sound. Okay, so good morning, everyone, and I think, Woody, you're going to have to change the slides on this one. Am I correct?
Yeah.
Okay.
Yes.
All right, good morning, everyone, and we want to thank you for spending a few moments of your weekend with us. We hope your weekend's off to a good start, and you have myself and Woody that will be with you this morning. We usually have a staff, but just the two of us today. And Woody's claim to fame is he is a former NASA rocket scientist. So in our room at night, we like to say it's not rocket science. We have a real live rocket scientist as part of our group. He lives down in Florida, and when they shut down the shuttle program, he decided to retire and trade professionally. So he joined our service and became so enthralled with it, if you will, and enjoyed it so much that he became part of our group and is one of our moderators, and has created a tremendous amount of technology and charts and patterns that we use to trade the market in the Globex. So this morning, my goal is that if I can just, say one or two things this morning that will make you a better trader or a better investor, then I think we will find that time well spent together. All right, sir. I don't have the, Woody, go ahead. Usually on our system we can advance the slides. Just let me say, because I want to set the stage for why the space we trade in is probably extremely important. And if I do leave you with anything this morning, the one thing I want to leave you with is that if you're not familiar with the Globex or this market at night, you're leaving a lot of information, valuable information, that you can use to make you a better trader. Now, even as Nick talked about, you're going to hear all the presenters, I'm sure, talk about the global markets. We all know we're in a global economy. What happens in Japan can affect us here. You see the stimulus that they're providing in Japan. When the yen moves, it affects our S&Ps at night, but we're in a 24-hour market, and we trade in the Globex, which is after hours, and that's where most of the futures, not most of, but just about all of the futures, financial futures that you can think of, trade now in the Globex, and we're in a 24-hour market, as I said before. And in this market, there's some 17 hours it takes place after the U.S. closes. The Globex starts trading about 5 p.m. And all the times, guys and gals, that I'm going to use today, you can see I'm turned around, are Central Time. So we start our day at 5 o'clock in the evening, and we go to 5 o'clock in the morning. Now, I know you're thinking, I have a job, or I have kids, or I have things that I have to do. I can't stay up all night with the market, and we know that. We're well aware of it, but it's a 17-hour market, and the beauty of it is it gives you flexibility. For example, if you work during the day and you find it difficult to trade or follow the markets during the day, well, here's an opportunity to do it during the evening hours. And because it's a slower market and less volatile market, it's an easier market to follow and trade. But if you're not following the Globex market, or what we call the after hours market, you're leaving 17 hours of valuable information on the table that could help make you a better investor or a better trader. Even if you're not going to trade in this market, guys and gals, it's important that you know basically how it works and what goes on in this market. The majority of the news that affects your trading or your investments when you wake up in the morning, generally it occurs in these markets at night. For example, the Lehman debacle, the tsunami in Japan, the crises in Europe, and most recently what's going on in Ukraine. You could see, markets that move one way during the day, and then once we get into Asia, they start to move maybe sideways to moderate, and then when we get into the Asian session, the European session, which I'll tell you about in a minute, and these markets start to move in a totally different direction, because Europe can be most affected by what's going on in the Ukraine, more so than how it can affect us in Asia and in the U.S. So before I go too far, I want to ask some of you, how many of you have ever traded in this space at night, the Globex after hours market, the market that starts, as I said, around 5 in the evening and trades to the U.S. opens in the morning? Okay, James, if you're there, I'm not seeing the questions.
Okay, give me 1 second. Let me see if How about now? Do you see any of the question sections that came up now? Should be in that chat box where that orange arrow was.
Okay, let's see. Okay, I'm seeing them one at a time,
So
but
on
I'm
the
seeing
controller,
them.
there's something that says questions. You can
Yes, how do
pull
I?
that thing out.
Let's see if I can do that. Well, I'm just seeing them one at a time.
By the box that closes it with the little X, there's a thing that shows like a corner and an arrow. If you use that, you can pull a whole question box out separate.
Well, it's not working, but anyway, I'll just have to read them one at a time.
I see them. You got a mixed 50-50 of yes and no.
Okay, well, here's what we'll do then, because I'm not getting seeing them one at a time. Woody will answer your questions, and then when we wrap it up, I promise we'll take time to answer questions. I apologize for this mix-up. But again, you will be surprised at the number of people who are not familiar with this market. And the way I became involved with it is when I was at Merrill Lynch, and I think a lot of you remember during I think it was probably the early to middle 90s, the Japanese economy was flying high. Their Nikkei was at 44,000. You know, that's an index today that's at 14,000. And I wanted to try to find a way to, you know, put some kind of spreads on, or at least short the market, because I thought that Nikkei was overbought, having followed it as a portfolio manager, thinking that it might pull back a little bit. I had no idea it was going to pull back like it did, of course. And even though I worked for a New York firm that had a presence in Japan, we had offices there, even though I had that ability to open an account, you know, and trade, I would have had to open it in Japan. I would have had to trade, of course, and convert into yen, which I didn't mind, but you know, that's still something else that you have to consider and deal with when you're trading, when you're using another currency. And I couldn't get quotes real time. The fills were sloppy. There were huge spreads on the bid and ask, and you know, just to follow what the market, you know, in terms of your contract was doing was very difficult to do. Now again, I'm going back into the 90s. I think most of you remember the Japanese were buying, you know, Rockefeller Center. They were buying Pebble Beach, and you know, everyone thought the Japanese were going to take over the world. And so eventually, as we know today, they went into a period of deflation, which is what concerns most central bankers most around the world right now. And during that spiral, the Nikkei went from 44,000, 43,000 down, you know, eventually to 7,000. Now, guys and gals, I want you to think about, you know, how that decimated, you know, the savings and investments of many in that part of the world. At any rate, that index today is trading, you know, between 14 and 15,000, and that's after recovering from 7 or 8,000, where it leveled off and stayed for a long time. But back to what I was trying to make a point of is that today, now this was in the 90s when, you know, the Globex was just, you know, getting started. Today, if you want to be able to do what I did, if you see that opportunity in a marketplace, you want to short it, you want to go long because you think there's an opportunity. Now, if you have a few $1,000s in an account, you can just with the click of a mouse with good fills, very low commissions. Back then the commissions were like 25 or, you know, $50 a round turn. It was ridiculous. You know, for $5 or $6 a round turn now, you can buy a future just about anywhere that controls just about any markets. You want to short Germany, you want to go long the Nikkei, you want to go long something in China, you can do that now through these markets. So that's why it's a huge benefit to understand how these markets work. Now, for those of you real quick who are not familiar with the Globex, it was a product that was originally created by Reuters in conjunction with the CME, and they started this program in the early 90s. Now, it is the grandfather of electronic trading. most of all the platforms, electronically speaking, that you trade on and see today originated from this platform. This was the beginning. And I was involved with this program from the very start. And in those days, you had to purchase, first of all, a Globex terminal. It was a few $1,000s. It wasn't inexpensive. And then you had to pay some $1,000s a month to have the Globex terminal. And that's assuming you could even get approved by the Futures Exchange. It wasn't just something you call and say, I wanted. And the only way you could enter orders was through this Globex terminal or to call orders into a desk that you had been, approved to trade through. So it was a very, very small community. There wasn't anyone there to tell you, don't do this, or, this is something you should try and consider, because there wasn't any manuals or instructions, or there wasn't anyone who could tell us, how to navigate these markets at that time. So we had to find our way. Those of us who, started trading in this market, I guess you could say we were the pioneers, to figure out how it worked and where all the traps were. So I was one of the original. I doubt there's just a handful of us, and I doubt you will find or meet anyone that has been involved with this market as long as I have. I can almost, name the ones who were involved from the beginning. That's how small a community it was. Now it's a very large community, of course. It's one of the fastest growing segments in trading, and it's, again, all futures now. And if you find that you have a situation where you want to hedge your portfolio, and we'll talk about that in a few minutes, this is the only place you can do that, or take advantage of something that's going on in the world before the U.S. markets open in the morning. You don't have to necessarily wait. Now, I will tell you, we have a recent example of that this past Thursday night and Friday morning. If you were up with us and watching these markets, you saw the DAX in Germany. Again, Germany being the largest economy has the most to lose if the situation with Russia gets out of hand. And so the next thing you know, we're actually up on the S&Ps. Then they started to disintegrate when Europe opened, along with the DAX and the FTSE in the UK. And then when we opened up in the morning, I think you all know how Friday traded. And a lot of that started in the Globex at night in this space that we're going to talk about. You didn't have to wait till the U.S. Open. You could have taken advantage of it right there and then. Now, most recently, they changed the hours. In the early days, as we like to say, as some of us older guys that have been around a while, the Globex had defined hours. It would start at 3:30 Central Time now. Again, all the times are Central. It would close at 8:15 before the U.S. opened, and then when the U.S. opened at 8:30, you can no longer trade in the Globex session. Now it's virtually seamless. You can trade 24 hours around the clock. You can take positions 24 hours. The only difference is that the markets close in the U.S., as many of you know, the cash closes at 3 o'clock. The futures in the U.S. close at 3:15. The futures only open at 3:30. They trade till 4:15. Then they shut down at 4:15, where all the servers are resetting. They're, doing margin requirements, what have you. They reopen at 5 o'clock, and that's when you start the trading day. So for those of you who are not familiar with the Globex, if you think the trading day starts in the U.S. at 8:30 in the morning, it doesn't. It starts for futures at 5 p.m. the night before the U.S. opens at 8:30 in the morning. So it's very important, just if you understand that concept, you know a little bit about what's going on and what can affect the opening in the morning and how it might trade the first few minutes when the market's open. Now, what we're going to talk about that we specialize in, you will find, well, we don't know of anyone who has a chat room or a system that does what we do. Now, we check from time to time. I can't, 100% say there's not someone, but as far as we know, we have the only live chat room that's staffed by professional traders literally the entire session from 5 p.m. till 5 a.m. in the morning. Some nights we might finish by 3 a.m. It just depends on the market and the trading. But there's someone in that room to help you navigate these markets, help you understand what's going on in these markets, and help you navigate this jungle we call the trading universe. So what we're going to talk about, and this is something that perplexes a lot of people when they first hear about it, they say, well, you know, I just don't have the time to learn how to become an international economist. This sounds complicated. I don't want to understand, you know, yen and euro. It's just more than I want to, you know, spend time trying to learn. Guys and gals, trust me on this because I've been doing this as long as anyone you will talk to. If you want to learn to trade futures, this is the best place to do it because it is an easier market to learn and is an easier market to navigate. Okay, Woody. So what we're going to talk about is because it's a slower moving market, it's an easier market to trade. You don't have anywhere near the volatility that you have during the day. And of course, if you watch this market during the day, we all know how volatile it has become, and it's just almost impossible to figure out some of these moves that it's going to make. The Globex at night is a better trending market, and what I'm speaking of now are just the S&Ps. We only trade the mini S&P. My philosophy is learn one market, learn it well. Now, we will watch other markets like the yen and the euro and the bonds and the NASDAQ, you know, to get a feel for where the S&P may be going. But we only trade the mini S&P, so consider that, keep that in the back of your mind as we talk this through. Now, here's one of my favorites, and I think a lot of you understand this, and there's been a lot of this in the news lately. You do not have these computer buy and sell programs in the night session like you do during the day. Now, I'm not going to tell you there are computers executing orders. Sure there are. But first of all, you don't have the high-frequency trading. That's number one, because there's just not enough volume in this space to accommodate these quant models. They require a tremendous amount of volume, as you know. Now, you have computer buy and sell programs that may execute orders, you know, in the Nikkei in Japan or in the DAX in Germany, but you just don't have these computers buying and selling large quantities and, you know, increasing the volatility of these markets and the risk. And also, we've developed trade signals, and I've spent, you know, since the early 90s doing this, as I said, testing these signals, and when we find something we think works 75, 80% of the time, then we adopt it because we know if we can find something that works that often, we can do pretty well. So we only have these trade signals that work at night. They don't work during the day. And because, and now here's what's most important, especially if you want to learn to trade futures, because it's less volatility at night, we can use tighter stops. Tighter stops means less risk. We generally will use a 2.5 point stop, and that has a high percentage rate of keeping us in a trade. Now, 2.5 points, even if you have the market direction, you know, nailed down to a fine-tooth comb, so to speak, if you have it almost down to a point, 2.5 points during the day, a lot of times will get you stopped out, even though you have the direction figured out. Okay, Woody. We're used to an Omnovia room where I can change the slides. All right, now earlier I talked about one of the benefits of, in addition to trading in the Globex, it is a tremendous tool for hedging. So let's say you go home in the afternoon, you're happy with your portfolio. In fact, just recently, this week, you would have seen this, and the markets are doing well, responding well to earnings. You've got stocks in there that you're comfortable with. You wake up, there's something going on in the Ukraine, and it changes the whole profile of the market. And this gives you the ability, if you understand this market and at least have a basic knowledge of how to navigate it, you can hedge your portfolio by using futures. Now, I'm not going to spend a whole lot of time on this area because, you know, we can spend probably 20 minutes on the mathematics that if you have a $500,000 portfolio, what you should do. Okay, sir? All right. So this is a slide that will give you just a basic understanding of how you can hedge a portfolio. As I said, I'm not going to spend a lot of time on that. And all of these slides in the presentation, of course, is available to you by emailing us at nightscalper.com so that you can get this information and study it at your leisure. Okay, Woody? All right. Now, I'm sure you've heard this before. You've probably heard it already this morning. What is the difference between an average trader and a successful one? And of course, we all know you have to have an effective plan and a discipline in which to trade by. And after 24 years of trading in this space, I'm going to go through some of these one by one and just give you a quick overview of how we approach it. All right, we're going to talk real quick about key market times. Now, you don't have to worry about key market times during the day. Yes, there are certain days pivot points that you can pick up on trading during the day, but key market times to us means something completely different. For example, what time does the Nikkei open, which is 7 o'clock p.m. Central Time when we're on daylight savings time. When we're off daylight savings time, it's 6 p.m. If you're going to trade in this space, it's imperative that you understand these key market times. What time does the DAX open in Germany? What time do the markets in Asia go and break? So, we provide these times so that you'll know, because the S&Ps have a tendency to move when these markets open and close. Then we have the proprietary signals and indicators that I have spent a good bit of my career developing, testing, trading with since the early 90s. He's trying to answer questions and move the slides at the same time. Usually all he has to do is answer questions. We have Greekisms. Now, the Greekisms, I know you're not going to understand that, but that's a nickname that was given to them by the folks in our chat room. I will say that we have one of the friendliest and most cooperative and helpful chat rooms in the universe of chat rooms. And of course, we have, as far as I know, the only live chat room at night. It goes from 5 in the evening till 5 in the morning. The folks in there will go out of their way to help you. Our staff's there, our traders are there to help you. And what they have called the Greekisms, they're basically broad occurrences that take place in this market on a regular basis, and they nicknamed them Greekisms. There's some 15 of those. I'll give you an example of some of those here in just a second. And then money management. You heard it with Nick, speaking before myself. If you don't have an effective money management system, guys and gals, this I can promise you. You might make money occasionally, but you're not going to be consistent without a proper money management system, and you're not going to be able to control your losses if you don't have a disciplined money management system. And I'm going to give you a brief overview of how we go about that. Okay, Woody? All right, key market times. Here's an example of what we're talking about. Now, during the day, from 8:30 to 3:15, the U.S. market is the dog that wags the tail. But that's not true at night. Unless there's some big news that's affecting the U.S. exclusively, the markets that control during the times from 5 p.m. till midnight are the Asian markets, and we call that the Asian session. And the markets that control during that time are the Hang Seng and the Nikkei. Now, I know many of you are going to say, well, what about Australia? And what about South Korea? Again, these are important economic markets, but they do not move the S&Ps, and we're only interested in those markets that will affect and move the S&Ps. And in all my years of doing this, it's been the Hang Seng and the Nikkei that will move the S&Ps during the Asian session. If you don't believe me, just pull up your account at night if you have a futures account and watch the Nikkei move and watch the S&Ps, and you'll see that 80% of the time, now nothing happens 100% of the time in the world of trading, we all know that, but 80% of the time, 75% of the time, these markets are going to move together. Now, when we get into around midnight, we start to transition from, maybe even 11 o'clock, again, Central Time. 11 o'clock, midnight, we start to transition into the European session, where the European sessions and European markets become dominant. and the two markets that we follow there are the DAX and the FTSE. So it's important that you know the DAX futures now open at 1, that the cash markets in Europe open at 2, because that will affect how these S&Ps move. You can watch these S&Ps move sideways. Sometimes it gets so quiet, it's like watching paint dry. Next thing you know, just before the DAX opens or the cash in Europe or the Nikkei, you'll start to see the S&P start to move. So it's just really simple, and I think all of you understand this now. You know, a few years ago, you didn't care about GDP in China. You didn't care about PMI news out of China that usually comes out, you know, around 8 o'clock Central Time to 9 o'clock. If you don't know when that news is coming out, and we have a real simple way of knowing when that news is available, it will move the markets. Now, you know, 5, 6 years ago, you didn't care about, you know, the economics of China, for example, because let's face it, you know, it's a communist country. We tend to forget that now because they walk and talk like a capitalistic system. But the bottom line is they're the second largest economy, you know, just recently replacing Japan in our world markets. And if you don't know what's going on in China, then you're at a huge disadvantage. Here's a prime example of everything we're talking about this morning. And how many times have you turned on CNBC in the morning to find out what the markets are doing, and the markets may be down early because of news out of China that is economically related to the world economy. All right, Woody. All right, now as I said earlier, our key overnight trading times are 5 p.m. till 5 a.m. Central Time. These are the Globex trading hours now. For the most part, they go from 3:30 p.m. till 8:30 in the morning, but we're active usually from 5 to 5 a.m. There are times we may put on a trade before 5 p.m. into the close, and I'll tell you about how we do that in just a second. But if I leave you with one important piece of information, if you're ignoring the market at night, as I said earlier, you're leaving 17 hours of valuable information on the table that can make you not only just a better trader, but a better manager of your money and a better investor. All right, sir? Okay, so real quick, I have these proprietary trading signals that I've mentioned earlier that I've spent years developing. And what's key in this market at night that's not key to do necessarily in the U.S. during the day are pivot times, as I said before, knowing when these markets are known to move. And those markets, as I said a few minutes ago, are the DAX in Germany, the FTSE in the UK, the Hang Seng and the Nikkei. Also, one of our key and most important trading tools that we use in this space is the DOM. Now, many of you are familiar with the DOM, depth of market. If you have a futures account, you have a DOM. That's the, you know, where you see the volume and where you generally enter your orders to buy and sell futures. For us at night, this is our most valuable trading tool. During the day, it doesn't help you whatsoever. So here's just another example of how trading in this space at night or early in the morning is different from trading in the U.S. markets. And as I said also earlier, other markets that we follow are the bonds, here especially of late the euro, because of all the stimulus that's taking place in Japan. The yen and the euro. The euro can be an effective market to watch if you're starting to hear the ECB talking about creating more stimulus, quantitative easing, if you will. That'll give you a clue when that might start to happen, because that will definitely affect our markets here in the U.S. So just like here in the U.S., when these central bankers, which, you know, just drives me crazy because it's so unpredictable, you never know when one of these guys is going to come out and say something, or ladies, now that we have Janet Yellen, say something that's going to move these markets in a dramatic way. And it can be, you know, just as much that way in Japan, because if they start to stimulate, that's a plus for us and world markets, as it is in Europe, as it is here in the U.S. So by looking at the bonds, the yen and the euro, sometimes you can gain a lot of clues as to what these folks are thinking and what they're trying to do and accomplish. All right, a minute ago we talked about the Greekisms. Now these again are just broad signals, if you will, or patterns that I've identified over the years that you can use to trade in this space, and they can be very, very helpful. So let me just give you an example of a few of those because we don't have time to go through all of them today. Okay, this is one that we use a lot. It's one of my favorite trade setups, and we have a high percentage of trades that we like to place with this, and it kind of works this way, and I'll just give you a couple of examples. Let's say, and we see this a lot, especially in these markets the way they've been here of late, you'll have bad news early. Let's take the employment numbers on Friday, which are probably one of the biggest market movers news-wise that you can think of. And let's say that, and of course the last two have been better than expected, but let's say we get a bad employment number in the morning on Friday. The market reacts as it should negatively. You know, it comes out at 7:30, as all of you know. And then the markets open down, and then they start to firm up. And eventually, as the markets will do on a lot of Fridays and markets can be very unpredictable. They'll start to work their way up. They start to squeeze the shorts start covering. It feeds on itself, and then they close on Friday evening, Friday afternoon, at the top tick of the last hour of trading. If they close at the top tick of the last hour of trading, you can sell the S&Ps into the close, and then Sunday night you have an opportunity to scalp a point or two, maybe even more, right on the opening. Or if there's news that happens during the week. I'll give you another example. Let's take corporate news that comes out at 3:15 that can move the markets. Most recently you saw what Apple did. Ran the S&Ps up from some 1868 roughly, where we were trading into the close. The news on Apple came out with the stock split. NASDAQ took off, completely reversed, by the way. It was down 35 most of the day. Then next thing you know, it's up 35. I mean, that's just a huge swing, guys and gals. You know, that used to take a week to move that much, and now we're seeing it in a matter of hours. And, you know, the S&Ps went from, as I said, 68 roughly up to 79, even getting up as high as 81 or 82 before it was all said and done in the Globex session. And there was an opportunity to sell into that, and then, of course, the next day, you know, benefit from it. So whenever there's news and the markets react to that news, if they close at the top tick of the last hour of trading, then there's an opportunity to make money in the Globex session once it's open, whether that's from Friday to Sunday, because the Globex opens 5 o'clock Sunday night, not Monday morning at 8:30. So our world, markets start trading Sunday night at 5 o'clock. That's when our day starts, if you will. Or if you have news on a Wednesday or a Thursday, you can take advantage of that as well. All right, here's another Greekism, again, just so you can understand what the Greekisms are. Now, these are not the indicators we use to trade by. These are just general concepts and that we have noticed that take place over in these markets over the years that will help you in your trading. Happened this past Monday as well. Options expiration, of course, we had Good Friday, but that didn't really change anything. The Monday after options expiration, generally 80% of the time, it opens up on Monday morning. Doesn't mean the market's going to be up all day Monday, but generally it opens up on Monday, the Monday after options expiration. Now, by knowing that information, and it really helped me that past weekend on Good Friday when that took place, because I was in a position and I knew that at some point this market was going to probably rally. Just didn't know when, you know, precisely. But I was short the market. I was able to go ahead and take my profit because I knew that at some point the market was going to start to turn around during the Globex session Sunday night, open up Monday morning. Again, doesn't mean it's going to be up all day. Of course, this Monday it turned out that it was. But I was able, by just knowing that little bit of information and having been short, early Sunday night, to avoid a loss on my trade, because I was able to get out with a profit knowing at some point this thing was going to turn around and open up Monday morning. So that's an example of a Greekism as well. A lot of times the market will open up, trade up for about an hour, and then you can short and fade that opening and also make a little money during the day session. But what we are talking about is how to trade the Globex, this market that, as I said earlier, trades from 5 p.m. till 5 in the morning. Now the reason I say 5 in the morning is because once you start to get into around 5 a.m., that's when the U.S. starts to dominate. So you're getting into U.S. trading, and so the U.S. again starts to be the dominant market, or as I like to say, the dog wagging the tail. All right, now a minute ago we talked about money management, and we spend a lot of time on this, and as we like to say, it's the great separator. And here are some of the biggest mistakes that I think you're probably making or you have made. And the reason I say that is because we have all, at one point in our career, made these mistakes. I know I have. All right, so we all know a proper money management system, and this is where most folks just underestimate their trading ability by not having a proper money management system. Not only having one, but having the discipline to follow it day after day. And of course, I think we all know this one over trading. This is probably the #1 biggest mistake that I see many traders making. Even some of the seasoned traders, they'll have a good morning or a good couple of hours, and they get right back in the market. And how many times have you done it? I know I've done it, and give it back. All right, #2. Trying to hit home runs. We've all done this. I know I have. And that in itself can be a problem. If you're trying to do this even occasionally, you can have a good 3 or 4 days in a row, then try to hit a home run and give it all back. Now this one is not so obvious, is withdrawing profits on a regular basis, and I'll talk about that in just a minute. And the 4th one, trading too many or not enough contracts. So let me tell you the night scalper system and how we approach that. Let me preface this part by saying this. The majority of folks in our room are in there to supplement their income. If you're going to consider trading in the Globex because you want the adrenaline, you want the action, you just want to be able to continue whatever you do during the day at night so you can trade more hours, then I think you're going to be disappointed. I'm going to tell you that on the front end. This is a slower market, and if you're looking for, action, this is not the place you probably want to be. Although you can get it, I just don't think this is the space you want to trade in. Now, our goal is to make a steady 1 to 2 points a day, and I'm going to tell you why that's important. You want to trade multiple contracts because by trading multiple contracts, you increase your chances for making money. Let me give you an example of that. Let's say that during the day, if you trade the S&Ps, you trade 1 contract. You can increase the number of contracts you're trading. Doesn't matter what it is, because the Globex at night is a slower moving market, and you can easily go from 1 to trading 2 contracts, maybe with as much risk or less risk trading 2 contracts at night than you do having 1 contract trading during the day. So a lot of times what we'll do, and we did this, I have to go back and get my nights straight now when we're here on a Saturday. I think this was, yes, Thursday night, Woody, I think that's correct. We sold 71. They traded down to 69.5. We took half the position off. Again, if you're trading 2 contracts, you took 1 down with a 1.5 profit. We shorted 71, took it off at 69.5, because sometimes this market will just start to sell off or rally in a big way in this space at night. In this case, we had the big sell-off because of what I was talking about when the DAX opens, because of what's being perceived to take place in the Ukraine. And so this market really started to sell off. So if you sold 2 contracts at 71, you took 1 contract down at 69.5, well, what do you have now? You have a 1.5 to play with. You bring your stops down to 72.25, 60 or 71.75. You've got that 1.5 to play with. You put your stop wherever you want to. In our case, we brought it down to 72.25, and we let the other contract, the runner as most people like to call it, we let that one ride. And guess what? The market fell out of bed. And, you know, you could have gotten 65, you could have gotten 64, but the point I'm making is at this stage, once you got that 1.5 with a very little amount of risk, you're now playing, as people like to say, with the house's money. You could not lose money on the trade. And now you have that runner, and you know, if it market really sold off, you could have a great night, or if you wanted to, you could have taken both down with a 1.5 profit and had a great night. So again, this is, let me continue to tell you how we approach this. Let's say you want to set a goal, and that's the very first thing we ask you to do when you join our program. Set a goal. Now let's use the example we have on the slide. And you know, it has to be obviously a realistic goal. Let's say you want to make $2,000 a month. Let's assume there are 20 trading days out of each month. That means you need to average $100 a day. Now we know, you know, some days you're going to lose money. So some days you might need to make more than 100, but you need to average $100 a day. Now guys and gals, that's 1 point on 2 contracts. As I just said, we sold 71. We bought back 69.5 on 2 contracts. You were already up 150. You could have quit right there. You'd met your goal. Or you take 1 down, as I said before. You bring your stop down so you can't lose money on the trade. You let the other one run, and that way you can have a great night if it happens to break down like it did Thursday night, or Thursday morning in this case, during the European session. So if you can make 1 to 2 points on 1 to 2 trades per night, make your $100, satisfy your goal, guess what? You quit. You go read a book, go watch TV, whatever. You know, walk away, you hit your goal. The problem that we see over and over again, and this is a tendency we all have, you want to keep trading, and a lot of times if you keep trading, you have an increased chance of making a mistake and giving it back. So you have to be considerate. I'm not saying, you know, make you $100 and just quit, but you have to limit the amount of trades you make and be considerate of your goal, and when you reach that goal, stop. So what we try to do is we try to teach you the night scalper trading program. We encourage you to treat it as a job. Now earlier we talked about, you know, taking a draw out of your account weekly, every 2 weeks, monthly, whatever, you know, you're comfortable with. Reward yourself for following your discipline, for watching that screen at night, for you know, for your time. And if you take money out of your account and reward yourself on a regular basis, it's like Pavlov's dog. You know, you want to do the same thing over and over again to get the same response. So we encourage you to take money from your account on a regular basis and reward yourself for your efforts. All right, so I think we have enough time here real quick. Woody's going to come on and just give you a quick overview of some of the technicals we use in our chat room, just so you can get a brief look at how those look and how we use those in our room at night. Woody, go ahead.
Okay, can you guys hear me? Okay, I see some yeses. All right, so we use some Ninja chart indicators. We project foreign market live data. We project the Nikkei and the HSI, and those are from the Singapore and Hong Kong exchanges, which are real-time, versus equivalents that you see from the CME are oftentimes delayed and not real-time, and you can't use the CME delayed quotes. They'll, you know, you'll be late on the trade, whatever. We also project the DAX and the FTSE in our rooms. And so those are expenses that if you were in our room, you don't have to go and seek those. They can be anywhere from 50 to 100 bucks a month to get that real-time data from those exchanges. We have a Dome-O-Matic, which is basically similar to what Bill talked about the Dome, only this one sort of does the math for you. We have some initial balance level lines that are shown, some trigger lines, blood lines, Bollinger Bands, volume, MACD, histogram. A lot of this is changing right now, but this gives you a pretty good idea of what we're doing. And you have a time and sales window that we project. To show you what that looks like in our room, and I don't know if you can you guys see, I don't think you can see my pointer, but up here in the top right-hand side, we have all the market data. You can see Asia, Europe, the U.S. markets, some of the currencies, yen and euro. Those are the things that we look at. The chart basically shows what's going on. This indicator in the middle with the arrows here, that's our Dome-O-Matic. It basically does the calculations that we teach in our plan for how to
Hey, Carol.
how to use the Dome.
Hey, baby, I can't talk right now. I'm in the middle of a webinar.
Yeah, okay. So, and then you see the volume MACD down here at the bottom in the time and sales window. So that's kind of what our projection typically looks like. I'll give you a little bit of description about the Dome-O-Matic. Basically, this indicator adds up the contracts on the bid and the ask side of the Dome. And depending on which one's larger, it puts an arrow with it, and then it divides the larger one by the smaller one, and it gives you that number up the top. On this slide, it's 1.98, and that basically is the strength of the unweighted balance on the Dome. And believe it or not, the unweighted balance causes the price to move in the direction of the heavier side of the thing. So you'd think if there were more sell contracts that the price would move down, but in reality the price moves into the more contracts, at least at night. In the daytime you can't say the same thing, but oh, okay, so you can see my cursor? All right, great. Yeah, it's counterintuitive. The price moves in the direction of where there are more contracts. You'd think it would be the opposite, but it's not. IB lines, initial balance lines. Basically, this is a concept that was developed for the U.S. market, and it has to do somewhat with volume profile theory. And basically, the first hour of trading sets sort of the range for the day. And then the day will typically move in increments of 50% of whatever that initial movement was for that first hour. So there's a high and a low for the first hour, and our indicator basically tracks that. At the end of the hour, then it'll create a projection for the rest of the day of the pivot line, which is in between the high and the low for the first hour, and then that's 50% in between there, and then that's added or subtracted from the high and the low to give us these projections. Now the place where I developed a little something here was I figured that this initial balance would work just as well for European markets and Asian markets, because what it is it's a psychology related to the traders. You know, they get this idea that you know, you have a certain amount of movement. If I can get 50% more than that, then we're all set. And so that's where they take their trade-off. So like even right here, you can see that this was trading, and then it went to 50% of the extension and then back down. It went to another line down here during the day later. This one went up to this line. It paused a little bit. I need to move along, but here's how they are. And the value of this indicator is that it shows the enthusiasm of today on today's market, as opposed to pivots that are calculated based on yesterday's high, low, and close. This is what I just described on the initial balance, basically, so we don't need to go over that slide. We have another thing that we use, which is trade by colors, and this is on a pretty high tick chart. If you had used this day and just bought it when it was green and sold it when it was red and bought it when it was green, there was a potential to make 24 ES points that day. That's like $1,200 for one contract. Here's a description of that trade by color, the volume MACD. We're running out of time, so I'm gonna let Bill get back and pick up from here on. Thank you.
Okay, can you hear me okay? All right. Thank you, Woody. Real quick again, because we're running out of time. Again, the method that we use, and it's important, our key points are the key market times, the proprietary signals, the Greek isms, and money management. I know some of you are going to ask me about the performance, so Woody, real quick, if you'll put that up. But you'll be able to get this information. We'll send you all the graphs that show the returns if you just email us. All right, and here's what we're going to do today. I promise you this is not complicated. It's very simple. As I said earlier, if you want to learn to trade futures, this is the place to do it. Every trader should understand this market, whether you're going to trade in it or not. Okay, Woody? So here's the offer, the Night Scalper Elite. This is 30 days to see if everything we're telling you works the way we say it does. And I'm telling you, if you just learn one thing, from our room or about this market, it's money well spent. You'll get the Night Scalper 101. You'll get the 30 days access to the trade room. The first Tuesday of every month, we have in-depth training. We don't try to just teach you a little bit of the time and then come back and say, okay, pay us more money and we'll teach you some more. We try to teach you everything we know. We don't try to hold anything back. As much as we can get into a couple of hours, we do that the first Tuesday of every month. You get trade alerts and emails each and every time we have a trade set up. You'll get the market times, indicators. You'll have, as I said, professional traders in the chat room with you at all times. You'll get the low risk, high reward trade setups and all the useful tools and trade signals and indicators. $47 for 30 days. And I promise you that is $47. If you learn just one thing about this market, it will make you a better investor, a better trader. It's money well spent. All right, because we're out of time, real quick, I'm going to take some questions until he cuts me off.